This is the Daily Market Rundown live from the Tradelo trading floor. It's July the 14th. Some highlights from today's show. The EU receives their 30% tariff threat, US equities are now pegged until opex, and Bitcoin has more room to run. Good day traders, and welcome to another week of futures trading. Let's get stuck straight into it. Ultimately, if we look across the board, it's light volumes, which is somewhat unexpected given we have, of course, seen the ultimate threat now thrown towards Europe. That's a 30% tariff on all imports from the 1st of August. Now that's problematic for a number of reasons. Now before we get onto that topic, ultimately let's try and understand why it is that the markets are so contained, so relaxed about the current situation. Now yes, taco trade, I get that. It's this idea that we'll look through all the risks and ultimately nothing can go wrong and the President of the United States will back down. That's one element of it, but perhaps there is another technical factor, and I will show that to you on a chart in a minute, but it's got everything to do with the fact that we are now into opex week, okay, where we will see VIX expiring on Wednesday, as well as, of course, the indices expiring on Friday. So it's very much the options flow that's perhaps pegging the markets, similar to what we saw in April. If you go back to the DeepSeek, back in sort of March, April, the markets were very, very contained, a lot of fundamental negatives, and yet the market could not budge once the opex came, once we got that window of weakness where the opportunity had, or the markets had the opportunity to flow a little bit more freely, we then got some of the downside moves. So it may just be a case of, this week we stay contained, Wednesday, Thursday, perhaps into Friday. Once we get beyond this week, we start to see that little bit of a correction that so many people are talking about. Now, let's get on and talk about that first topic. It's very much about ultimately what's going on in Europe. Now, you should be well versed in what's happening. The key things to point attention to is very much this idea of what does a 30% tariff mean? Well, look, the reality is we know that the EU thinks they can get 10%. We know that Trump ultimately gave them 20% on Liberation Day. We know that 20% was problematic for Europe. We know that they've been trying to negotiate and been very positive about this idea they will get 10%. But we also know that the fact that Trump has come out now and hit them with 30% suggests that the idea of the EU getting 10% is quite far-fetched. Okay, I think that's ultimately what we need to take away from this, is that the EU is going to have to give up a lot, including their digital services tax, including a number of different things. They're going to have to really give into a lot of US demands to ultimately secure a 10% tariff. So you've got to ask yourself, practically, how possible is a 10% tariff for Europe? I'm not sure it is possible, and so I do suspect ultimately we are going to need to see that 12.5% marginal tariff rate that Wall Street sees as consensus for the US, that is going to have to shift a little bit higher towards 15%. And that's all you really need to take away from it. It's going to be somewhat more inflationary. It's going to be somewhat more impactful on US growth and global growth in general. And ultimately, it is going to have implications for a number of different markets, which we'll get into in a moment. Okay. Now, one thing I will say is if you go and look at obviously some of the murmurings from the likes of the EU negotiators, I think Sefcovic has said something quite important, which is practically you put a 30% tariff on Europe, you can pretty much kiss goodbye all trade between Europe and the US. Okay, so 30% is just a non-starter. It's something that if it were to occur, you can pretty much assume the worst case scenario. Okay. Now that's important to stress because clearly the markets are not phased by this. We can see obviously DAX is the key underperformer today, but it's only down 0.95, and this is as we're sitting just off of record highs. Okay, the point is that the markets are unfazed, and it's got a lot to do with the option space, which we'll talk about in a minute. But keep a close eye, of course, as we move into the next 3 weeks. It looks like the market's going to start the sort of countdown clock where every day that goes by, the potential risk of a sell-off will increase. And I think that's how you have to look at it. There will be a number of people hedging against the downside move. Make no mistake, people will be coming defensive after this week, and that's ultimately what we're looking for as traders. We kind of have to keep it tidy this week, but then ultimately position ourselves shorts for a correction into that 1st of August day. And we'll talk about that now as we get on to some of the charts. So looking at the VIX, I think this is quite interesting. There's two things to point out in terms of what happens after the VIX expiry. ultimately, the pinning effect, we can see that there's some very nice, positive, some effectively puts that are sitting there that are keeping the market contained around that 17 level. In other words, the dealers are very inclined to pretty much sell the VIX at 17 and go and buy it back pretty much, call it 16. So the market is sitting pegged between the 16 and 17 level, and it's ultimately the dealers that are keeping the market keeping it contained. They're keeping it from ultimately becoming a too volatile environment. So that's the key. Now, if you go and have a look ultimately at what happens beyond this VIX expiry, we are going to see ultimately quite a lot of this gamma fall away, and ultimately we will then see the market move a little bit more freely. Okay, so that's the key takeaway. It's going to be a very muted impact on the VIX early in the week. Now, that doesn't mean that prices can't move down, but it does ultimately suggest the markets are going to be very contained until perhaps the latter half of this week. Now, looking at the S&P chart, I think it's quite an interesting play for what we need to do today on the charts. If we look at the weekly profile, that is pretty much the entire last week's profile. You can see trade was very contained. You can see some real sort of very aggressive dip buying that occurred early in the week. You can see some real aggressive selling that occurred once we got to the sort of record high territory. But I expect for today this gap gets filled. Again, compliments of ultimately the dealers really kind of coming in and perhaps selling very early on, selling that VIX, maybe moving it back down to 16, at which point I think we then move back towards the downside. So it's very much looking for a range day. I suspect the low could be in, or maybe a little bit of an extension on that low, perhaps down to 62.50, but markets are going to be very well supported there. So it's very much looking for the market to rally into the 6300, at which point I do expect sellers to enter and the market to drift back down. Okay, it's one of those days where I think it's going to be a little bit more straightforward, quite contained trade. You kind of want to be selling into any kind of aggressive rallies, but not being too aggressive on the downside, simply because of ultimately that VIX expiry that we need to get past beyond first. Okay. Then turning to our next attention is very much about Bitcoin. We know that Bitcoin's at record highs. We've been talking about this last week. I think the key for Bitcoin is very much where do we go from here? We have done a lot of work, okay? Make no mistake, we're up 10% in the last 3-4 sessions. Is that a lot? I think that's kind of the question that's been on my mind all week, and perhaps is on your mind. The short answer is no. Bitcoin is not a market that moves relatively normal. In other words, a 10% move is not a lot. We are not overbought by any stretch of the imagination. And I say that when we look historically back at what breakouts look like in Bitcoin. Does that mean we're going to the moon to 1 million? No. But it does mean ultimately we got a little bit more upside. Now, I think what is interesting is we do have a bill that's ultimately kind of going around where they're ultimately going to pass a few things this week in the US. More got to do with ultimately some of these stable coins. But again, I don't want to say this is positive for Bitcoin, but it's definitely positive for the industry. Okay, it definitely doesn't dent ultimately what's going on in the markets. I think a lot of what we're seeing in Bitcoin over the course of the last couple of days is flow driven. It's very much momentum driven. It's very much we're in record territory. There's a lot of positive sort of speculation going on, and it's not just in Bitcoin. Okay, it's in the equity markets. We saw most of the equity markets make record highs last week, so it's a continuation of that theme of perhaps a little bit more speculation as we break out to record highs. Now, in terms of where do we go from here, I think we've got very little to lean on to go and try and understand Bitcoin breakouts, because this asset hasn't been with us for that long. But if we go look at the sort of the two recent breakout trades that we had in February of 2024, and we then look again at the election breakout, I think they give us two sort of ideas of what we could expect. And again, the important thing to pay attention to is that Bitcoin ultimately before this breakout was not overbought. In other words, we could see a lot of those moving averages that caught up to prices, and so as a result we started this breakout from a relatively neutral positioning. Okay, we can see that 200-day moving average is around 96,000, and we were trading at 108 just before breakout. So a relatively, not necessarily overbought, but a relatively neutral positioning stance for Bitcoin. Now, if we go and have a look at the 2024 and again the 2025 breakouts, okay, we're looking at somewhere between 30 to 40% upside on the breakout. Okay, so if we look at ultimately where we are now, now as of today. There we can see that within 15 days in terms of the election, we had a 35% rally in Bitcoin, and then it consolidated a little bit before a little bit of an extension. Okay, but ultimately it was, call it a 45% rally in totality before the markets had found a top. Okay, the point is that we're only up 10% in the last 4 sessions. Now, is that a lot? Yes, suppose it is. It's not a small move, but the reality is this has got quite a lot more to go when we look at what we've done in history, when we also look at the fact that we were not overbought to begin with. Okay, so what are we looking for in upside targets? Again, I think 129,000 brings into around a 20% rally. I think that's very feasible, particularly today, tomorrow, Wednesday. I think it's going to come in short order. Why? Well, because like I said, the momentum's very strong here. The markets are very, very positively buoyed. So I do expect we're going to probably rally sooner rather than later. Why do I think sooner rather than later? Well, because the reality is that I think as we move into next week, we are going to see a little bit more risk off come into the markets. We are perhaps going to see a little bit of a correction in some of the equities as we get through the opex. Okay, so it's very much a case of, I think you can buy quite freely this week. I think you can be quite aggressive buying this week. I think you'll probably trade 130,000 in Bitcoin this week. But I think once we get to Friday, you're going to have to be careful. You're going to have to start lightening up on those positions because I do think then we'll start to see the market consolidate and move a lot more sideways. Okay, so it's very much a case of we've got a lot more upside. Look for targets to 129,000 over the course of the next couple of sessions. Okay. There's been a lot of rhetoric over the weekend. It seems as though this is becoming more and more frequent with regards to attacks on not just the Fed but also on Chairman Powell. And again, I think it doesn't matter what your political beliefs are. I just think the fact that we're now seeing a number of different angles of attack on Powell is perhaps creating a situation where I suspect what might happen is Chairman Powell may feel it's best for the Fed and for ultimately the Fed's credibility. He may think that the best thing to do is for him to step aside. Okay, now whether or not he did overspend, underspend, built, I don't know, beehives on the roof and all that sort of rubbish is kind of irrelevant. I think what ultimately matters here is what comes next. We know he's being pressurized here. We know he's under significant pressure. We know he doesn't want to step down, but we also know that we can't continue to see these ongoing attacks on the Fed without any kind of a let off. Okay, so something is coming. We know something is coming. We know the President of the United States is not going to back down. Because we know he wants lower rates. I think you have to be on guard for that. I do suspect if we are going to get something, it perhaps comes around Jackson Hole. We know that comes in August. We know that is the time that ultimately the Fed does like to give its guidance moving forward. So again, it's very possible that we could have quite a bit of volatility into August. So keep an eye on this. Okay, what is the play on this? Well, again, if Powell is going to step down, it's going to be unexpected. We are going to see dollar get sold. We are going to see gold get bought. We are going to see long bonds in particular get sold. Okay, why long bond get sold? Well, the reality is if you were going to call into question the Fed's independence, and if they are going to cut despite the fact that inflation is rallying very aggressively, the result is that investors are going to want a higher risk premium. Okay, and so long bonds, particularly 30-year bonds, will get hit pretty hard on that, and we will get above that 510 level that we've been talking about for some time. Now, with that in mind, there is the 30-year bond chart. We spoke about this last week. I told you to keep an eye on it simply because we had broken out of that sort of 6 weeks of grinding down. This is a weekly chart, and what you can see is we pretty much exploded to the upside. We closed the week around 4.97, just shy of the 5% mark. And again, why does this matter? Well, if we look at effectively where we are in retrospect, we're pretty much at the highest yields we've been all year. Okay, we closed last week at the highest yields we've been all year. Now, that should be somewhat alarming because this is the 30-year bond. Moreover, we have got CPI tomorrow. There is an expectation that's going to come in hot. So should that number beat, even if it's a 0.1 beat, okay, long bonds are ultimately going to be the place where you're going to get maximum bang for buck. Okay, it does look like path of least resistance now is back up towards that double top around that 510 level. And like I said, it's not a case of necessarily we're going to rally above there. We're probably going to need a catalyst for that. We're probably going to need to see some really hot inflation, or perhaps Chairman Powell get clipped. One of those two things, fine. We'll get above that 510, and that will start to become problematic for a number of markets. But this is just a market to keep an eye on. Okay. At the same time, we can see a continuation of that steepening effect. And we know what that means. We are seeing slowing growth in the US. We are seeing the hard data start to slow. And now you've got a steepening curve. It doesn't really bode well for the long-term situation in the United States. Okay, then moving our attention, of course, to our play of the day. It's very much the euro dollar. This is something that, I was thinking about it this week, and I was quite surprised that the euro dollar actually capped lower. And again, why was I surprised? Well, go back to Liberation Day. The euro is the safe haven now. It's the ultimate safe haven, not the dollar. So the fact that it actually gapped down and gave you those prices was quite interesting. It has also come down to the bottom of that trend channel. So technically as well as fundamentally, prices are very well supported here. And I do expect over the course of this week, again, a lot depends on what inflation does. But should we see inflation miss just even a little bit, I do expect we will see the dollar get hit very, very hard. Why? Well, because if inflation is going to miss, poor Chairman Powell is going to be in the headlines again. He's going to get lambasted by President Trump, told that he's Mr. Late again. And the reality is, yes, should inflation miss this week, there is going to start to be a questioning about perhaps the Fed could do something in July, perhaps the Fed could signal a cut for September in July, and that's how they will ultimately start to turn more dovish. Okay, the point is, I think Eurodollar is very, very well bought here, well supported here, so keep an eye on that market. And then finally, if we're just going to have a look, of course, at some of the key events this week, it's very much opex. Like I said, it's all about the VIX expiry Wednesday and some of the indices on Friday. We do have, of course, inflation, which is the key risk event for this week. If you look at some of the implied vol for this week, it's very much a case of get beyond Tuesday, and once we're beyond Tuesday, everything opens up. So keep a close eye on that. We of course also do have the retail sales later on this week. So both going to be very important hard data points, but we are in summer markets. Okay, it's summer markets, it's opex, so pick your battles. I think that's the key takeaway from today. But like I said, there's going to be work to do, but perhaps it comes towards the end of this week and into next week. That's when we're going to start to see perhaps that correction take hold. So until then, of course, go manage the risk. Good luck out there. Go make some money.